All right, ladies and gentlemen, I hope you had a wonderful day. I got another watch list for you, but do not get mad at me. What I'm about to tell you is, one, the market isn't safe on either direction. We are no longer in a bull market nor a bear market, and pretty much the whole entire market is going to be dictated by the Fed futures. And as you see, that is in 3 weeks, 6 days, 18 hours. Okay, anyways, but the whole idea here after the minutes, I have a breakdown for you, but it is starting to look like the market is entering into that weird level of purgatory that we were in just a couple of months ago, where one day you're rocketing up, then you're coming back down, then you shoot up, and then you come back down, then you kind of hold the range here as every single week, every other week, you start responding to data. So if you are getting tired of data dependent, well, I hope you have some stamina, because you are going to hear that a lot more. We got the minutes today, and it was absolutely insane. I'm going to give you the breakdown. I have a bearish take for you as well as a bullish take, but let's start with how the market looked today. Remember, yesterday was a big sell-off. We were closing off of 2 red weeks in a row, getting ready for the minutes. You gap down early in the morning, but guess who came out early in the morning? It was James Bullard. Remember James Bullard? A couple days ago, it was like end of the day. He started talking about 50 basis points with Loretta Mester. Well, he brought it down this morning as we gap down. He came out and was pretty much saying that the market, he's expecting like 5.3, and he started talking bullish again, and that lifted up the markets pre-market. We kind of drifted down a little bit lower. The market opened up, and then we sold off instantly below 3,900, even touched, I think, as low as like 3,980. Then you rocketed back up. Then here was the minutes. It was actually one of the more bigger minutes reactions that we've seen in the last 6 to 9 months. So that was unique, but the content of it, which we're going to go over, it kind of left people in this argumentative state where everyone's trying to figure out, wait, it's old, but it's new, but it's not new. You had a lot of new data, but then they said this 3 weeks ago, and now we have to wait, and, well, guess what? You got a bunch of data on the way. So, Chad, it's going to get wild. Did I mention that NVDA had really good earnings? So that's what's helping you out post-market here, too, but we have a lot to digest. We're going to be going over or getting a lot of data both tomorrow with GDP and jobless claims, and then PCE on Friday, and then next week you're going to start the whole data cycle and then end the month of February. So it's going to get wild. The Fed event is lurking around the corner. We have a lot of data, and we are back to that level as of earlier where it's like, okay, you took air out of this little rally, but things aren't bad enough to bring you back down to a new low. Oh man, it's going to get interesting, Chad. So I got the plays for you. I got the keys, everything else you need. All you got to do is like the video if you would like to. You don't have to, but you know, you better like run it, baby.
Working to the couch, it's the 2020 election. Live in the hills, but I still get a spread. Started with a little, but I still reinvest it. Feel how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Mama never plans if he waits for perfection. Finger to the down.
But right off the bat, I'm going to start with my opinion, and this is usually where people start to get mad at me about it, but simply, I think the minutes today, they came off hawkish neutral. I was not expecting them to really bring us down as much as they did. I thought it would have been a more average move, but this is the part where people start to get mad. This is going to make all of the data moving forward a bigger read. We've dealt with this, and why it's frustrating is just take a look. You've gone through this where everybody wants an easy answer when it's moving up, and right when you think you have the easy answer, 1 week later, 2 weeks later, you're back down to here, but then all throughout these weeks, you're ignoring the data, then you're getting hyped up on future data, then all of a sudden people are responding to the data. You dealt with that a lot coming off of October, and I remember how frustrating it was for a lot of people. Everybody was saying, well, wait, what does this mean? I thought good news was bad news. I thought bad news was good news, and then you're seeing it applies 1 week, then the next week, and then you get one data set, then the market starts piling into that, and then the next week, everybody goes the other way as they respond to one data, and then another piece of data comes, and then people start to ignore it. So this is why I'm saying don't get mad, because we are going to be entering in that purgatory. The Fed futures and everything after today, it's really just highlighting the market is going to be sensitive to what the bonds are pricing in specifically for the next Fed meeting. But now every one of these data sets, it's just going to build on this story, which we've been getting all year. So that being said, now watch out for the PCE. I think this is going to be the biggest reaction on Friday, but tomorrow there's GDP and jobs report that can cause some reaction, especially if the data is really hot or really cold. That's going to give people at least something to bounce on or something to be fearful off of, especially in the context of everything we've been dealing with. Again, in your rear view mirror now is all of this stuff in the last 2 weeks, and then every single data set, people are going to try to put it against this backdrop of the minutes that we got here today. So hopefully you guys are ready for that. But now let's talk a little bit about the minutes. I have a bearish read for you, so I encourage you to watch the stream, go back on the recap. You can see what we were talking about it, but I hope this could sum it up for you. The bearish read on it, the first thing is that the Fed made comments towards financial conditions being consistent with the degree of policy restraint. So why is this bearish? Because during the Fed meeting where Jerome Powell was answering questions, he said, we only care about the long-term and, long-term financial conditions. He played it down, and people were expecting him to beat down the market last time on those comments, but he didn't. But it looks like during their discussion, they were kind of a little worried about it, or I guess they were not as favorable towards this gigantic rally as maybe Powell sounded. So that could be interpreted as bearish. Like I'm saying from the beginning, I thought everything was hawkish neutral, bearish neutral, depending on how you want to look at it. And I think some of these things you kind of got to reach for it, and that's why everything's going to be data dependent. I know, I'm sorry. But the second thing, and this is where it gets really interesting, they said that a few members, literally the key word is a few, because it's not a couple and it's not some. That means pretty much more than two, but not a majority. Yes, this is how people interpret the Fed in their writing. I know it may seem like it's kind of wacky, but no, this is real. But they said a few members saw 50 basis points, or they could have supported it. So the other day, you heard from James Bullard, you heard from Loretta Mester. They're the ones that brought this up, and pretty much what this is saying is that there could be, or there is, one more member on the Fed who is also supporting bigger rate hikes. And now here's another one. The idea of 50 basis points, reading through the minutes, they did not totally squash this idea out of anywhere. And remember, on the last Fed meeting, they were talking about, or people were looking for the Fed to remove that phrase, ongoing rate hikes. That would have given you a signal that they're getting close to pausing. Well, it didn't seem by this discussion that 50 was out of the question, and it seemed like they did 25 more for a strategic purpose, with a couple or few people lurking there that think it should be higher, and then they double down saying it depends on the data, disinflationary pressure, yibbity-bobbity-boo. And then the final part, which is now what a lot of people were kind of flipping between back and forth on this, is that they said all of this stuff. They were talking about financial conditions. They were talking about the things that are making inflation better or worse, the jobs market, all of the stuff you've already heard. But here's the thing. Since that Fed meeting, you've had a jobs report with 500,000 jobs. You've had a extremely hot retails report. You've had PPI come in hot, and then you also had a hotter than expected CPI. So a lot of the data in the last 3 weeks has been a lot worse, and this is where the bear's imagination is starting to take over, or even fear is starting to enter in the market. And that is exactly why now all of these data points are going to have the potential to move the market a lot bigger. So that is the bearish read if you want to reach for it. And I still also think the bullish read is kind of a reach too, but let's start with the first thing that was bullish out of this whole thing. Nothing was new. They said the exact same thing, and even the whole 50 basis point thing, although it is hawkish and worrisome, you had Mester and Bullard who hinted at it just a couple of days prior. I was saying this all day today. If they did not come out and bring this up, today would have been a big shock. If anything, this is kind of what Powell was probably alluding to when he said, oh, don't worry, Nick, we're going to answer your question about, when we're going to pause or the mechanism. Nothing showed up in the minutes, but this was a big change. And thankfully, not thankfully, depending on how you want to look at it, we were already warned by Loretta Mester and James Bullard. So that actually kind of made it a little bit more bullish. It definitely blunted the blow of any surprises on the minutes. And then the next thing, all of the Fed members were still in favor of smaller rate hikes due to risk management. So even though they did not eliminate the odds of 50 basis points, even though those odds are much lower, they did rise after today. The fact of the matter is they were all in unanimous agreement to pretty much say, though, yes, we need to slow down at some level, and we got to do this so we could be in a position to assess what's going on with the economy and move forward. They literally described it as risk management. So that one was really important. And I think that kind of shows you the bullishness where, you know, the Fed is just going to respond to the data, again, data dependent. And then finally, here's another thing to take in mind. Yes, people are reacting to hot data as of recently. You're reacting to 50 basis points and things changing after rallying so much. But after today, it's looking like any disinflationary data, it will cement a smaller hike and a more accommodative Fed. It's not as if the Fed was like trying to beat you down. They commented with the financial conditions, but it wasn't as aggressive. And this was actually the most dovish statement that has came out in the last 12 months. If you actually just looked at the reading in the text, this was the most dovish read that we've got on it. So in a weird way, this could support the bulls, because if that data matches up with disinflation and we see that come back again, I think that is going to hook the bulls and anything else for the stock market. So hopefully that helps. It's a very simple breakdown here. And like I'm saying, you could take all of this in, but the next sets of data, it's definitely going to move things, and we are going to need more pieces to get the whole picture. So that is everything. My final key for it now is what I'm telling you. Everything's data dependent, and the Fed futures, these are the thing that is moving big, or these are the things that are moving big right now, and the market is responding, and we're about 13 to 17% away now from the undecided point. At the beginning of the week, this probability was 12. The week before that, it was at like 2%, and now today it's at 24. It hit a high of 27, but here's how it works with history. The Fed goes with whatever is at 60%. But if it's at like 60-40, that's that 13, 17% away from here. That's where things start to get more undecided. And I think you're going to get a lot of volatility there, because when the Fed futures are in the middle, guess what? They're going to take the data and they are going to respond and swing wildly to all of that. So hopefully that makes sense. And the final thing to bring up with it is that now if the market and the Fed futures go undecided, we have a lot of data until March. So I think the market is in the same place right now. It's what I believed. I think the upside is limited. I've been telling you that for a couple of weeks. But in the same respect, I also believe that the downside is limited. And that's why now we got to wait till we get the data. Let's see how the Fed futures are. But quite frankly, when it's all said and done, everyone's like, no, this is priced in. This isn't priced in. Hibbity bobbity boo. No. We've seen it before. I think we'll see it again. It's just all going to come down to the Fed futures the week before. Everyone's saying, no way they do 50, no way they do a quarter. It doesn't matter, because they mention this on the minutes as well. They go off of the Fed futures. They look at it, and they do not want to upset the market, and they're letting the market kind of figure this out. They kind of took the training wheels off ever since Powell has been dovish, but the minutes showed that he cared, even though he said he didn't care. And I think that's what they're going to boil it down to. Let the Fed futures, if the Fed futures say 50 coming into March after all of the data that's going to come up, we're going to do 50. If it says 25, I think we're doing 25. It's a done deal, and the market's going to move a lot in the meantime to match up with everything. So I hope you're ready, but let us get into the plays. So right off the bat, I got a couple of different plays. I think I only made 2 plays today, and I'm going to start here with a play that I don't have. They had earnings after hours and an announcement, but MRNA and MRK. I'm liking MRK a lot better, but there was cancer drug news after hours about like a cancer MRNA thing, and it had a really good reaction. A lot of people have been talking about this, but now one thing I want to bring up, today was a bad day. You saw the defensive sell-off. The Dow actually got beaten more than tech today, believe it or not, whereas the last couple of days it was kind of holding up better with more of rotation elements. But healthcare has been on a 8-week decline. If it's going to be a comeback, they got some big cancer news. I think this one could be good, so I'm definitely going to be watching out for this. This is play number 1. Then play number 2, I should put NVIDIA on here, but I'm putting AMD, and NVIDIA killed their earnings. They knocked it out of the ballpark, and AMD even got a little bit of the gains as well too, but NVIDIA did good due to AI. They said that AI demand is going to outweigh any slowing personal computer demand, so it was actually very, very good for such a big company, and they're already back up to the 225s. The conference call has been good so far too. I think all of that's good. It's helping out the chips, and I think AMD now, they have no more earnings. They're holding up. They got a little bit of this hype here, and they're cheaper. I think this one could be a good play tomorrow, so I'm definitely going to be watching out for that one. And then finally, Palo Alto Networks, but they had good earnings today, and they had a very big gain, and that's the risk towards it. It closed up, I think, the biggest since like 22 or 2020. They're up about like 12.5%, but if this thing gets above 190, it really starts to open up a $10 to $20 range to the upside. But like I'm telling you, the downside is that it's up so much today. You also have like an easy $10 to $20 to the downside. So depending on how things play out, the data, all of these plays I would keep in mind for both tomorrow and Friday, because we are going to get two sets of data, and just go and follow the market with there, get an idea of sentiment, and hopefully you're able to balance it all out. But those are the main plays. As far as everything else now, all I did today is I grabbed NVIDIA shares, 25 at 208.38, sold them for like $1 higher. I made like $30 on it. This was the pre-earnings run-up. I told you if they were outperforming yesterday, I was going to buy it, and sure enough, they did. Thought that one was a good play, and then I also shorted 25 shares of DXCM at 109.20, and the reason was there was like a breakthrough new secret Apple product they're working them on about pretty much monitoring blood glucose levels through an iWatch. Now, analysts on the second half of the day, they said this is a non-event. It's way, way out there, years ahead. It's just like a preliminary product. It's not even going to hit the market. They said people were kind of looking at Abbott and DXM way too aggressively. So it did bounce a little bit, but I figured 25 shares, we'd ride it out. I got a decent fill, but I think I'm down like $2 now, or $50. Kept it small with 25 shares, and DXM has already kind of been on the downtrend, so I thought it'd be interesting. They got a little bit of premium, but then they also have like a lot more downside as well. So we'll see what happens. Gonna be writing that out. As far as everything else now, I don't know if I have them up here. Yeah. Well, we'll start with the NQ. That one came back a little bit today and then kind of balanced out. Same thing with the bonds. And remember, we will be rolling this over here by the end of the week. But still in that, I'm happy with how it played out. But I definitely could have been happy with the bonds. But I've even been saying it here with any of the shares, the futures, and just taking a look at the market. You guys have seen a lot of things change. I'm very comfortable with what I'm holding now, because even if I could get back to break even on a couple of these, anything pops off, any data is sensitive, I think I'm going to be in a very great position. And then we can maneuver with everything else. So gonna be watching all of those. Still in the BABA. That one is even down a lot. I will make an average down, but I'm not quite ready. Or if I do, I'm gonna balance it out there with the Yang, and I'm still in the Yang too. So both of these, just bad timing. I'm down on at literally both of them, but we'll find out how that plays. I still like the LMT. Didn't come up as much today, and the Boeing didn't go down too much. So thought that one was a little interesting. And then Amazon and Google. Amazon came up and led a little bit. Google, it's near the 90. I may want to average down on that. And then ACAM as well. This one, people keep asking me about this. This one is different than all of the other plays here, because I think they have buyout potential. I've been saying that for months now, so take it with a grain of salt. But that's why in this one, I may even want to be buying more, but I'm going to be riding this one out. And everything else, though, these are kind of all the plays I've been picking up and balancing with all of it. So it's like it sucks because I'm down on some of these, but like I said, if you've been watching, you know this number was a lot bigger. So in a weird way, it's working out very, very good. I'm excited for all of it. I haven't added anything else too crazy. I think the other plays from earlier this week, still in the EBS, still in the WWE as well too. All of these plays are down, and I'm going to have to work my way in and out of them. But like I'm saying, I think I'm in a good position. If we get a monster bounce, all of these positions will be able to go up that are red on the shares. And then if we go down, we're going to make a way more money than we would lose on any of these. And then I still have the flexibility to average in and out. So I'm excited about it. I hope you are ready too, but that is everything. And Chad, we're going to have an exciting one, so I hope you're ready. But That is your watch list, ladies and gentlemen. Make sure hydrate, healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. And I need you to remember, a lot of people, they underestimate what they could do in 10 years and overestimate what they could do in 1 and 2. You have to have a long-term vision. You made it this far, and don't underestimate how emotions go into risk management and everything beyond. If you stay in the game, you could purposefully keep yourself alive. There's a lot ahead of you, baby. So God bless you with all that stamina. Let's go, Chad. It's game time. We got more data. We're wrapping up the second month of the year now. And before you know it, man, it's going to be March. And then it's going to be summer. Then another week after that. It's game time, baby. Horn.